Good evening and welcome to our live stream on student finance. It's a fascinating topic, I'm sure you'll agree, but it's a really important part of your student experience. If you can manage your money, then your student experience will be all the better for it. And we're going to talk you through the process of how the student finance system works, how you apply for the finance, what funding you can get, how that funding carries you through your student experience, how to budget your money. Budgeting is a phrase I didn't really discover until towards the end of year 3 of my student experience, if at all, but it's a really helpful tip to pick up. And then we're going to talk about repayments of any money you've borrowed after you've graduated. I'm Jamie. Evening. Hope you're all doing okay. Hope you had a good day. And looking forward to getting back to school or college in a couple of weeks' time. I've got 2 little kids and I know they are absolutely desperate to get out of this house and get back into normal life. My little one homeschooled in her school uniform yesterday. That's how keen she is to get back to school. Good news for you guys and good news for me is I'm not flying solo on this shift. I'm joined by my esteemed colleagues, all of which have got loads of useful information and some personal top tips and advice. So Nikila, hi, how are you doing?
Very well, thank you.
Good. Are you looking forward to talking about money this evening?
Oh, definitely. I know it's probably not necessarily the most fun topic, but as Jamie said, it is something that's really important to get to grips with at the university. So definitely let us know if you have any questions, pop them in the comments. We'll be happy to answer them for you.
We will. We'll bring comments up onto the screen. We can talk about other things alongside finance, and while finance is the main gist, if you've got any burning questions about any aspect of UCAS or applying to uni, do throw them in the comments and we'll pick them up either in the chat or we'll bring them into the conversation. Dal, good evening, mate. How's life with yourself?
Not too bad, can't complain, although it doesn't seem like anything's new apart from the day.
That's very true, isn't it? But at least we've got the Boris announcement that life will potentially, definitely, maybe start to open up bit by bit by bit. You know, you can mark dates on your calendar and tick them off as they get closer.
Until there's another variant that miraculously appears out of nowhere.
Don't tip me with the variant negative. Come on, we'll have no variants in this stream. This is going to be a happy path to 21st of June freedom, which coincidentally, as someone pointed out in our team the other day, is 2 days after Boris's birthday. So coincidentally, he's got the lockdown opening for his birthday. Yeah, nice power if you've got it, isn't it? Sadly, it's a month after mine. Henrik, last but not least, mate, how's your evening going so far? It's about to get better with finance.
Yeah, good. And hopefully with the Champions League as well, just to sort of throw that in there. But yeah, no, good, thank you. Feeling a bit more positive after the announcement and the news yesterday. Can go back to playing rugby on the 12th of March, I think it is, which is
29th.
Is it? That's for gyms, I think sports earlier than that. I'm not sure.
29th March, like grassroots, and then
29th, yeah. So yeah.
I've marked my calendar, Emric.
Things to look forward to.
Sounds good. The Champions League sounds good. Sadly, my Atletico Madrid shirt hadn't arrived in time to wear for this stream there, Henrik, tragically. So, you know, never mind. Maybe next time for the second leg. Right, okay. So, without further ado, let's kick off with some of the real key issues. So I think the most important thing to talk about is when it comes to university, the university experience, and for the first time in your education experience so far, it isn't completely free. When you're at school, when you're at college, you've not got to worry about how much is it going to cost to do my A-level English literature, how much of a tuition fees for my design technology GCSE. But when you come to university, you've suddenly got cost attributed to the student experience that you've got. So the first thing I want to kind of dispel the myth on is you do not need to rock up to university and pay your tuition fees up front. Literally, as a home student, and by the word home, I'm meaning English, Scottish, Northern Irish, Welsh, so not just an English student coming to an English university, you've got the ability to take money out and pay towards your fees with that money rather than using your own cash. So your parents don't need to be super rich to get to university, and you don't need to have saved up for years and years and years to find your tuition fees. Let's go over to Dal to open us up here. Can you explain, Dal, how the concept of a tuition fee loan works for home students in terms of paying those fees?
Yeah, sure. So as Jamie mentioned, there are tuition fees attributed to you guys coming to university, but please do not let that be a factor that deters you away, because when hopefully by the end of this live stream, you'll be able to understand why it's not that scary at all. But universities can charge up to around £9,000 a year in terms of tuition fees, but no one's going to ask you for that money up front. So when you come to start with us in September or October of the academic year that you guys go to university, you do not have to pay that up front. So that's paid for you on behalf of Student Finance England, and it's paid directly to the university. So as you progress through each semester, Student Finance England will automatically pay the university for you. So it's not paid 3 years in advance. It's as and when you complete semesters in your years. So the tuition fee loan is available to cover all of the cost of the fee that it is for you guys to go to university, and it's currently available to all UK nationals. So if you have any questions around eligibility, our biggest advice would be check out the Student Finance website, and we will post a link in the chat there, because there are so many different nuances when it comes to eligibility, and everyone's personal situation can differ. So it's always best to get that information at hand as opposed to us vaguely speaking around certain types of eligibility. But there's no upper age limit. So say, for example, if you are a mature student thinking about coming back into education, then please do not fear, as you can apply for student finance.
Thanks, Dal. Yeah, I mean, the tuition fee eligibility thing is always complicated. The question in here from, let's just pop it up on the screen, give it recognition, from Ararola here. So, Ararola, I do apologise. Looking at that, theoretically, you would be eligible because 3 years is usually an amount. But as Del says, you're always best to officially check. You can check with Student Finance England. You can also check directly with the university by formally emailing them in. Every university has got an expert team who deal with this piece and now know the rules inside out and now be able to make a decision on your fee status. The good news for EU students is if you're an EU student applying for an undergraduate degree this year, whilst officially you've got international fees to pay for, there is a scholarship that means that makes up the difference between the home and the international. So the EU fees are still going to be the same as the home fees for this year. So even if you do get designated as an EU student rather than a home student, the actual fees you need to pay will still be the same as the home ones. But definitely worth going into your case in detail. And if you talk to Student Finance, they'll ask you a series of questions. What you've been doing since you've been in the country, are your parents in the country, are you paying tax in the country, those types of things. And that will then be able to give them the info to decide and guide you as to what your fee status would be. So definitely reach out to get those specific informations from there. Right, so thank you, Del. So hopefully that's put to rest that kind of panic that you need to have this £9,000 sitting handy in a briefcase under the bed somewhere waiting for university. You genuinely don't. That tuition fee loan covers the experience for you whilst you're physically studying. So you don't need to spend any more cash up front day by day by day than you do in your A-levels, your BTECs or your GCSEs. The actual principle of going to university doesn't need you to have finance behind you. So moving on from there, we've got the tuition fee loan. Now that's covered you off from your overall experience academically. Who wants to explain? Let's go to yourself, Henrik. How does the maintenance loan work? Can you explain the principle there? Because the other thing that students will have going to university is those living costs, be it rent, bills, grunts, and whatever other things students choose to spend their money on. How does the maintenance loan work?
Yeah, so the maintenance loan is slightly different to your tuition fee loan in the sense that it's means tested against your household income. So whereas Dal said before that everyone's entitled to the maximum amount of a tuition fee loan, the maintenance loan is slightly different. So as you can see by the fancy graphic that we've got on the screen right now, the higher the amount of household income that you have, the less that your entitlement will be. And there's a few other factors that go into that as well. So you can see that it says home, elsewhere in London. So if students are studying at home or they're living at home when they're studying at university, they tend to also be entitled to a little bit less as well, just because your living costs tend to be a little bit lower if you are living with, say, your family or your guardians. If you're then moving away, they do tend to increase by around £1,000 or so, just to cover things like your rent, maybe transport, bills, and that kind of thing. And if you are looking to also study in London, it does increase again, just because you sort of have that London tax, that price, that premium that you have on living in London, and the cost of things in London as well. So Student Finance have taken that into account. So with the maintenance loan, it is means tested against your household income. So when you're making your application, you will just need to obviously let your parents or guardians know that you are going to be using them as sort of the sponsor, I guess, for your how much you're entitled to, and they will need to submit some earnings and salaries between the household, and that will determine what you're entitled to. And yeah, but it's also just quickly worth mentioning as well that the obviously both loans, the tuition fee loan and the maintenance loan, are completely optional as well. So you don't have to take either of them if you want. A lot of students may potentially take, say, the tuition fee loan to cover those tuition fees. But then, say if they're living at home, there'll be a large pool of students that don't take the maintenance loan because they believe that their costs are low enough living at home and sort of things like that. So yeah, I mean, it does depend on a sort of case-by-case basis, but typically this is how it sort of work. So as your household increases, your household income increases, your entitlement sort of goes down, and that sort of caps off at around £70,000 as your household income.
Thanks, Henrik. That's really helpful. So hopefully we're starting to give you a bit of a picture here. You have got tuition fees, so there are these costs to university, but you can borrow the fee loan to cover all of those costs. And whilst moving away from home might mean you've got increased living costs to what you've got when you're at school or college, again, the maintenance loan is there to support you with that. To pick up Luke's question in here, is there a maintenance loan cap over that? So from the graphic there, that bottom figure on the screen is kind of the minimum loan that you'll get. So the loan doesn't tend to get any smaller than that. So you'll always be able to get an amount of loan. So that figure at the bottom there essentially is the base student loan. So if you're living at home and you're in that higher income bracket, or your parents are, then you've got that £3,500 loan. If you're moving to London, it's just over 6,000. If you're moving elsewhere, the ambiguous phrase is elsewhere, when you're talking just under 4,500. The idea is that even if you're getting the base loan, it's designed to cover your kind of core living costs. So speaking of which, Nicola, can you talk through what the typical living costs would be for a student, not necessarily amounts, but where their money would tend to go?
Yeah, of course. I do think it's really important that you have some kind of awareness of this, so that perhaps if you've got an idea of how much maintenance loan you're likely to get, you'll know how far this is going to last, because there are lots of things that you need to start to pay for at university for the very first time in most cases. So within your maintenance loan, you'll need to cover things such as your rent, and that will vary obviously depending on the type of accommodation that you choose. So definitely do your research and see what fits within your budget, as there's loads of different options there. You'll need to pay for bills potentially, depending on your accommodation. Some student halls will include this, some will not. If you go for private housing, for instance, normally, more often than not, your bills aren't included. So do your research and make sure you get your budgeting correct. Your bills will include things such as your phone, gas, electricity, water, internet, TV license, things like that. You will also obviously have food and groceries to pay for the first time, potentially, and you'll have things like transport to consider. So even if you don't necessarily live far away from the university campus, you might want to consider the cost of transport for visiting home, for visiting friends and family. These are all things that you might need to look into. And then if you do choose to live away and commute to university, obviously your transport cost might be considerably higher. So do your research. You'll also have course materials to pay for. So, for instance, if you do a really practical degree, a lot of art students do tend to spend a little bit of money on art supplies and things like that. Books, obviously stationery, bits like that. So you might need to buy a laptop. There'll also be things such as like clothes and toiletries to pay for, and obviously that is completely your decision on what you choose to spend there. And you might want to look into things like insurance, whether that's contents insurance or even just phone insurance, because I know a lot of students do find that will be like a really unexpected bill that might come out. So if you've got contents insurance, then you're always covered, and it's just best to be on the safe side, really.
Thank you, Nicola. I'm loving the detail. I'm loving the detail, particularly relying fancy dress costumes, as though that is a core cost. There is quite a lot of that type of thing goes on at university in terms of your social life. So having those little bits of cash away, thank you for the tips as well as outlining what the actual costs are. And obviously you can control those. The tuition fees are a fixed amount. You can't kind of negotiate with the union and go, yeah, well, it's 9,250. How about we shake on 7? It is a fixed amount. Whereas the living costs, you can control. If you live with your parents and you live a fairly careful, frugal life, your living costs will be quite small. you move away and live a more exciting social life, your living costs will be higher. It's all about trying to find those balance points when you're getting a great experience, but you're not necessarily throwing more money at it than you need to do. Picking up a couple of questions. So Kian asked a question about, are these loans for paying for accommodation? There's no real rules with how you use these loans, Kian. So this loan, quite scarily for your parents, will drop straight into your bank account, the maintenance loan, in 3 installments per the year. You'll get a third of it in September, a third after Christmas, and a third in the spring. If you're moving away, typically you will normally clear off your rent for that month and perhaps clear up for that term and perhaps clear off your bills, and then what's left supplements your rest of your living costs. But if you're living at home, then you might spend that on something slightly more sociable than your accommodation. So how you spend it is down to what your lifestyle is and also what your financial need is. And as Henrik said, you've not got to take it out. If your living costs are small, or your parents have said they'll pay for your halls, maybe you don't need it. Or maybe you say, you know what, I might not need it, but I want it anyway. It's essentially is your decision as to how you use this money based on your needs, but also your kind of choices, really, I guess is how it works. And in terms of how you know your household income, if you are living with your parents, you do tend to need your parents to be involved in this application process. We're going to talk about how you apply in just a sec, but usually it's done jointly between the parents and the student applying, because they need to know your personal details and your application details, but also your parents' information to be able to work out where in that sliding scale of loans you will sit. So normally your parents will be involved in this. And certainly if you want to get the higher amounts of loans, you do need to declare what the household income is. Any other questions popping up we need to talk about? There's one way up here talking about, let's go back to this one, because Shark Girl's putting loads of comments in the chat, so I need to give her due reference here. She's also doing our job and picking up loads of the questions, which is great. We could be hiring you soon, Shark Girl, at this rate. What we've got here is, what's the difference between undergraduate, graduate, further education and postgraduate? Let's go to Henrik to pick this one up. Do you want to give us just a quick mini definition for each one of those? And 2 of them actually are the same thing as well, which is even more confusing.
Yeah, undergraduate would be if you are studying, like you're at university. So once you finish your A-levels, your BTEC, so your access course, and you go on to study, you'll be doing an undergraduate course. And then once you finish either those like 3 or 4 years, and maybe you want to do a master's course, then you'd be doing, well, you'd be a graduate. Well, I'll confuse myself now. That's postgraduate, sorry. You'd be doing postgraduate study.
Shark Girl scratching her head here, Henry. She's like, no idea what he's saying.
Yeah. Undergraduate's like when you're at uni, and then further education, the same thing. Graduate's once you finished, and then postgraduate is if you were to do any study after you finish, things like masters, and then beyond that, you've got things like research courses and PhDs and that kind of stuff.
Thank you very much, your star. It literally is a chronological journey. So your FE, your further education, is largely your 16 to 18. Your undergraduate is your first degree, typically 18 to 21, though not necessarily. Our oldest student ever has been in her 80s doing a psychology degree. Fair play to her. And yes, you did make it to the end. I know what you're thinking. And also a graduate, a postgraduate degree is normally a 1-year course taken after your undergraduate. And a graduate is what you will be after you completed your degree. Yeah, so that is the journey. So thank you, Henrik, for that. So have you got any more questions? Let's just pick up one more from Kian, who's clearly listening attentively to this. You can, you get your loan, that maintenance loan, each of your 3 years, or if your course is longer, each of up to 5 years. You're not obliged to take it every year. It might be you move away from home in year 1, take out your loan, move back in with your folks in year 2 and think you don't need it. But you've got the ability to apply for it for each year of your degree. Speaking of applying for it, so Dal, let's assume people have applied to UCAS. They've got their application already in the bag moving forward. How does someone actually apply for their student finance? What do they need to do?
So one of the first things that you'll been notified of is that the student finance application portal would have been opened, and that happens around springtime, early springtime of every year. So February, March time, you'll get notified from student finance to say, right, you can do your student finance application. To do so, you would do it on the Gov website. So it's gov.co.uk/student finance. And everything's done online similarly to your UCAS application. So just how you filled out your UCAS application, you would do the same for your student finance application. So you'll create an account. So you need to use a username and password, but please do remember these credentials. So following on that question, in terms of reapplying for your loan, you will need those credentials in years 2 and years 3 if you choose to reapply for your student loan in those years. So usually the deadline for student finance, there is a deadline, and that usually happens around May time. And the reason why they give this subtle deadline is to ensure payment come the start of your first semester. So if you need your first payment before you move out, it's essential that you get your student finance application form done in on time, so then it can be paid directly towards yourself. So you'd need your passport. So if you don't have a passport, you can use a birth certificate. For any other forms of identification that they might ask, please do see the student finance website, as it is quite detailed, and it will provide you with the information of the types of ID that they accept. You'll also need your university course details and the universities that you want to go to. So on here, even if you haven't heard back from your favorite university, you can still fill out your student finance application and you can put your preferred choice down. Now, it could be that the university hasn't got back to you yet. Please do not let that deter you, because you can still use those details. And should you need to make any changes, you can always phone up student finance and make a change at any point once the application has been submitted to them. You'll also need your national insurance number and also your bank account details of where you want the loan paid. We will always recommend that the student puts their own bank details down, so it gives you the added responsibility of looking after your money. And as the guys were discussing, there is 2 parts to this application form. So there's a student part, which is what the student has to fill in, but then there is also a sponsor section. Now, your sponsor is either your parent or guardian, and they will then need to put in their details in terms of the household income, in terms of what other assets they've got, for them to determine how much maintenance loan that you are entitled to. So you can also submit any supporting evidence if you are applying for any DSA, so disability support allowance, and those questions again will be prompted to you as you go through the student finance application.
Cheers, Del. I mean, the application, it sounds like a lot of hard work because it's quite an intuitive form. It takes you through step by step by step by step. It isn't as bad as it sounds. You know, it will ask you questions. It will say, do you have any dependent children? If the answer is no, then it skips all those sections and moves on to the relevant bits. It's quite a straightforward form to fill in. But ideally, having all your information to hand and your parents' details to hand will make the process a lot easier. Otherwise, every single question, you'll have to get up and run to your drawer and pull out your national insurance card and so on and so forth. So you've got it all lined up, make the process easier. So your chronology, you apply to university first. Then you can apply for your finance as soon as it offers. You, like Del says, you're not going to wait for your offers to come back. And then your accommodation will open as well. And you don't need to have your finance secured to do your initial booking on your accommodation. You'll need your finance secured to pay for the accommodation when it comes to it in the autumn, but you can apply for the accommodation as soon as the university of choice allows you to. So normally it's apply for UCAS, apply for finance, then apply for accommodation is the order it tends to typically work. And there was a question about when's our next intake. The next intake is for both undergraduate and postgraduate courses is September this year. So we have an intake for postgraduate that kicks in January, and a few undergraduate courses start then. But for the bulk of undergraduate courses, they're an autumn start. So it's normally the last week in September, and our next postgraduate intake is in that same period. It's only really research-based courses like PhDs or doctorates that have more rolling starts, and you can jump on or jump off whenever suits. So hopefully we're starting to give you a bit of a picture of how the whole process works. So you've applied for your student loans. You've realised you're not going to pay up front for your tuition fees, which hopefully is some reassurance. And you've had your maintenance loan to cover those living costs that Henrik's talked about. You've also used Nikila's tips to keep those costs under control and not completely blow your budget on week 1. The most ridiculous thing I've ever heard of a student buying with their maintenance loan was a boat. Literally, a lad bought a speedboat so that he could literally cruise down the river and live this kind of high life, but he blew his entire loan. And back in the day, your loan didn't come in 3 installments, it just came in a chunk, and literally he just spent all of it in one go, you know. So yeah, don't buy a boat, do buy something slightly more useful is my top tip there. just in case you were thinking you're browsing through boating catalogues whilst listening. You never know. So what I want to talk about now, hey, is that your dog in the stream here, Henrik?
Yeah, do apologise, everybody.
we don't get through many streams without the desperate to be involved. Any top tips on student finance coming in? No. So let's,
you know.
Well, in that case, Henrik, we'll come back to yourself. So the next thing we want to talk about is the concept of repaying. So you've had your student experience, you've spent your maintenance loan wisely, maybe even saved some cash to treat yourself to some nice things as well as covering the basic costs. And then you've graduated. And when people graduate, we do different things. Some people will be applying for very competitive, very high paid graduate jobs. Some people are go traveling. Some people are graduate and being a certain amount of shocks that university is finished and the real world, as my dad used to call it, is starting. How does the repayment of these student loans work after graduation?
So in terms of repayments, I think just firstly as well, I think obviously this sometimes can seem maybe the most daunting part, and once you actually look at the repayments and how little they are, I think it really does seem way less intimidating than you probably thought initially. So you don't start making your repayments until you are earning over £27,295 a year. So first things first, if you're a graduate and you go straight into a role where you're earning over that salary as your first job anyway, that's really impressive. But you do get a sort of free pass for a few months. So you don't start your repayments until the following April. So if you are considering something maybe like traveling or doing maybe an internship to gain that experience where maybe you're not getting paid as a salary yet, you don't have to worry about actually repayments until that point anyway. But then your actual monthly repayments are really quite small when they do start. So if you're on a salary of £27,295, which means you're bringing out around £2,200 a month, you're not actually repaying anything just yet. So you don't start making those repayments until you're 9% over that threshold of £27,295. So just to give you a little bit of context, if your annual salary is £30,000 and you're bringing out £2,500 a month, your monthly repayment is £20. Now, when you actually look at it in that sort of spectrum, it's really not too bad at all. And it's the price of a couple coffees and maybe like your Spotify and your Netflix subscription. So really, when you do consider, what maybe is a little bit more value for money, getting your degree and hopefully, giving you that greater ceiling when it comes to your career and your employment, or a few beers with your mates and your coffees and that sort of stuff, you can quite see there where the price matches up. So, and then it just moves through the scale. So once your salary does start to increase, your repayments do increase as well. But just to sort of give you the bottom of our sort of scale we've popped on our infographic today. So if you're earning £60,000, which means you're bringing out £5,000 a month, your monthly repayment is £245. So still really not too bad. There's loads of people that have got car finance and stuff like that is quite a lot more than that. So in the grand scheme of things, it probably is a really good investment, and definitely an investment in your future. Your balance itself, so your actual student finance balance, is cancelled after 30 years. So if you haven't paid it back in the 30 years, it does get wiped. And there is no penalty for early repayments either. So if you are in a position where maybe you do want to pay it off early, you're not going to get stung with any sort of early repayment fees. But what we do like to say as well is it doesn't affect your credit rating or credit score. So if you are, in a position to maybe consider getting a car on finance or a credit card or a mortgage, that kind of thing, it's not going to affect your chances of getting those. So definitely something worth considering. If you want to pay it off, feel free. But what we do try to say is, you're better off just sort of chipping away at it every month, because the interest is pretty low and the monthly repayments itself are pretty low as well. So that's kind of your repayments.
Thanks, Henrik. I think one of the key words you used in there is that word investment. University is an investment in both your experience in the short term, because it's an amazing thing to do and an amazing thing to experience in itself, your academic development, your wider transferable skills, and the employability that university will give you. So it's very much an investment in all those different aspects and benefits of why to go to university. And the repayments on the screen just now, they're the bit that makes the student finance system a lot more palatable, because you're getting £9,000 per year to cover your fees. You're borrowing 3 to £12,000 a year to cover your living costs, depending upon where you were in that sliding scale and a home elsewhere in London. But however much you borrowed, whether you borrowed 10,000 or 50,000, you're paying it back in those incremental, week by week, month by month chunks, always linked to your income. And if your income drops, your repayments drop. If your income goes up, your repayments go up, but always in that same sort of ratio compared to your income. You're never going to be impoverished because of your loan. The way I thought about it when I applied was, if uni worked for me and I got a good job, then yes, I was repaying it, but it was a really tiny amount of my salary and I got this great job with a good income. If uni didn't work for me and I didn't get a really well-paid graduate job, then I wasn't paying anything back. Therefore, I'd incurred no costs in those loans. So I think psychologically, that kind of helped me sort of visualize and get through it. Thanks. It's really, really helpful, that, Henrik, in terms of clarifying that, and also for the figures on the screen. Now, the bit we're talking about here, we've normally got our colleague Faye, who is the guru of all things interest rates. But in the absence of Faye, I can see Nikila smiling here. I'm going to come to Nikila very, very briefly. And we don't have to go into loads and loads of detail here, just to explain the concept of how interest rate work. Because if ever we have parents watching, it's always a question. If ever you go to a live student finance talk, there's always a parent who asks interest rates. So is there interest on the student loan, Nikila?
Yes, there is, but it doesn't work in the same way that normal interest rates work. So we'll just break it down for you. Now, the way that it works is that whilst you are studying and until the April after you've graduated, you will pay RPI, which is the Retail Price Index, plus 3% on top of what you're borrowing. So say if you borrow a lump sum of your maintenance loan and your tuition fee loan all into one, on top of this, you'll pay RPI and then an additional 3%. Once you graduate and after you graduated, so that's the April after you graduated, so say if you graduate September 2021 and then from April 2022 onwards, you will pay RPI as long as you're earning less than that threshold of £27,295. Then once you have graduated and you're earning above this threshold amount, you will pay RPI and up to 3%. So the way that it's calculated is that it goes up in little stages. So the more you earn up to the bracket of £47,835, you'll pay that 3% maximum. But if you earn lower in that scale, more closer to £27,295, you'll pay closer to RPI alone, if that makes any sense. And then once your earnings are above £47,835, you'll pay RPI plus 3% on top of your loan. So I know it sounds a bit confusing, but essentially I think that's in place to make it fair. So essentially what it means is that the more you're earning, the more interest you're paying. So I think it's quite a fair thing in that, in normal terms, if you take out a normal everyday loan, if you pay a mortgage or if you get a car finance, as Henrik said, your interest rate will be the same regardless of how much money you're bringing in. So it is a lot fairer in that the more you earn, the more you pay. So it's really kind of supposed to be there to make it a fair thing, regardless of your income, regardless of your financial background, regardless of how much maintenance loan you've taken out. Your interest is based on your income alone rather than how much you've borrowed.
Thank you very much. Always our favourite slide of the presentation, the interest rate one. But I think it's only fair just to show you that there is interest right from when you borrowed it there, and that amount you borrowed is slowly going up. But as Nikila says, it doesn't actually impact the amount that you would pay per week and per month, and therefore it doesn't really impact the affordability. It just makes a difference to how long you're paying it off. And most students, in reality, unless you're earning a really high salary right from the start, you don't tend to pay off the whole of a loan unless you accelerate those payments. And for me, I never really thought about accelerating the payments because I've got far better things to do with my cash than give it straight back to the folk who lent me to it, you know. So for me, I let it just trickle out over a period, but it is completely up to you. And also, going on to the question from Kian in there, it's completely up to you what you spend your loan on. I just be careful with it is my top tip there, because if you're relying on that loan to pay the core of your costs and you kind of speculate, oh, maybe I could invest it in a small trip to local casino and maybe I'll get my 3,000 and turn it into 50,000. Maybe you'll turn your 3,000 into absolutely nothing, and then you will be somewhat in trouble for the rest of the year. So be careful. What you spend it on is completely yours. You've just got to be sensible with it and treat it like real money, not monopoly money. Otherwise, just like in Monopoly, you can find yourself sat there and you know, having nothing left. So you've just got to be a bit careful with it. So let's talk a bit. Del, I can bring you in on this one. So let's assume that someone's got their loan and it isn't quite covering all of their living costs, or they want to have a more exotic lifestyle than their basic maintenance loan gives. How else can students bring in additional income on top of the core maintenance loan that they'll get by standard?
There's quite a few ways, to be fair. So one thing that I did when I went to university, I sponged off the bank of mum and dad. So when times did get a bit hard, it was a quick, right, mum, dad, can you drop X amount into my bank account? But for those students that aren't in the position to be able to do that, you can also have a look at any scholarships. So I'm sure we're going to discuss scholarships in a second. Scholarships and bursaries are a fantastic way to supplement your income and just to make your time a bit more comfortable whilst you're at university. As a lot of those, you do not need to pay them back. So I went to university on a scholarship, and I used that scholarship to go against my tuition fee, so I didn't have to pay so much in terms of my tuition fees. But what I did when I went to university, because I realised that I wanted to spend my maintenance loan on something different, so I used my maintenance loan to go and travel. So I got myself a part-time job, and what that allowed me to do was to survive off my part-time job. I didn't really have to touch my maintenance loan in terms of studying or paying for stuff that were associated to university, because the job that I was in paid me more than enough to survive, and it didn't clash with my university study. So I know a lot of students are concerned about that, and it's something that I'd always advise to students to be very cautious of, that you're not working too much, so it then starts to become a detriment to your working at university. So please do be careful of that if you are getting a part-time job. Luckily, my employers were very flexible with me and allowed me to tailor my shifts around my university studies. Kind of jobs that allow you to do that at university are our student ambassador scheme. So you can have a look on our website in terms of what our student ambassadors do for us. So they're part-time work, flexible work, and you pick up hours really that suit your lifestyle. So wherever you've got a few hours spare, you can try and do a shift for the university, maybe volunteer on an open day or help out in an event. And it's a great way for you guys to start to build cash without having the burden of committing to a set amount of hours per week as you would do through normal employment. You can also have a look at overdrafts. So again, it's not something that I would advise personally, because I believe it can get quite messy if you're not as responsible with your overdraft. But you can have a look at interest-free overdrafts where the bank will give you a little bit money if you are running short that month. Or you can have a look at hardship funds. So a lot of universities do hardship funds, and you can have a look at the hardship funds that we do, as we will post a link in the chat for you.
Thanks, Del. Did we all work part-time when we were at uni? Did all of us had a part-time job? You know, I definitely did. I used to work in a restaurant as a rather clumsy waiter, and in a bar, and then in the summer I'd work in local supermarket and in a bar to kind of top up my income. The idea being, if I worked all the time, I'd bound to save something because I'd have no time to spend it. It was kind of the logic, you know. But we all knew someone at uni who went too far in one way or the other. We all knew someone who blew all their cash in the first few weeks. We all know someone who worked so many hours in their part-time job they almost forgot they were doing a course. We all know someone who became so obsessed with the course they forgot they got a life. We all knew someone who was so obsessed with their social life they forgot to both earn and do the course. You know, it's all about finding a balance whenever it comes to university. It's trying to make sure that you balance your budget and you're aware of it, but not so much you become obsessive and don't have any fun. You study really hard and maximize your investment to get the best degree that you can, but again, not to the detriment of other experiences. And you work part-time, get those skills and experiences and bring in some cash, but don't do it so much that you miss your lectures and don't get any sleep and those types of things. It's all about balance. That's what my gran used to always say to me: work hard and play hard, you know. She's a wise woman, my gran. She was top tips. So, Nikhila, I'm going to come to you for this bit on budgeting, because you're something of a budgeting guru. You know, some of the stuff you come out with is something I should have been listening to years ago when I went to university. So when folks go to uni, you've got all your costs and you've got your income, and you're topping up your income with all those extra things that Del's talked about. What advice can you give to people to make sure that they're sensible with the cash and they balance that budget in the best possible way?
Yeah. So there's quite a few different ways that you can make sure that your money's lasting as well as possible. First and foremost, as I know we've said, obviously do rely on a part-time income. I think with the summer holidays, people don't realise that when you're in uni, your summer holidays can be about 3 to 4 months, and that's a very long time. Personally, what I did, so I worked in retail, so I worked at New Look back in the day. I'd work at the store in my hometown, and then during term time, I'd transfer back over. So what that meant was that in that position, I could transfer back for Christmases, for Easter holidays, for the summer period, and I'd pretty much work full time as much as I could around my studies. And that meant that I was never without income. I didn't have to go looking for a job or spend time looking for employment in between. I just split it between the two stores, and that suited me fine. Other top tips would be to choose the right bank account. With the Santander student bank account, you can get a rail card which gives you a third off rail travel, and that rail card lasts you for 4 years, so even a year after you graduate in most cases. And it's a really, really handy thing to have. You save so much money on rail travel. And prior to going to university, I hardly ever used a train, but I was literally on a train at least once a week when I was there, just because visiting friends at other universities, going home and things like that, you're always using the train. And if you're in London, actually, you can use your rail card. You can attach that to your Oyster card and get a third off rail travel. So that's my top tip. Also, pay out your larger expenses first. So if your maintenance loan drops, and as you know, obviously it drops in 3 different installments, to make sure that you're budgeting well and not spending everything all at once, pay out your larger expenses, such as your rent, first of all, just so you kind of know what you're left with to really live on. You can use things as apps such as Monzo for managing your money, or things such as an Excel spreadsheet. And they're definitely things that I rely on and still use to this day. Just because in things like Monzo, you have like a pot, so if you know you've got a particular expense you're saving up for, if you're saving up for a holiday or something, you can put the money aside in the little pot and make sure you don't touch it that way, rather than physically withdrawing the money, which obviously is a risky thing to do. Also, don't buy all your books at once. And it's definitely a mistake I made and wish I could learn from. You can buy them secondhand, you can buy them online, often you can get ebooks, and more often than not, your library will have enough books there for you. You might just have to wait for someone to kind of bring the book back into the library. So do have a look at the other resources rather than spending all your money on books, because for me, my degree was a degree in optics. The books were absolutely extortionate. And there would be, for one of my modules, it was human biology. Obviously, there's a massive textbook this big. We relied on like 3 different chapters. It was a complete waste of money. So definitely look into buying your books secondhand. It's more sustainable as well, of course. Do look at bargain hunting and avoid convenience stores. Our advice would always be, rather than shopping in Waitrose, there's nothing wrong with an Aldi or a Lidl. You can get plenty there for your money. Look at things such as student discounts. We have NUS cards, totem cards, uni days. There's more often than not a student discount available in most stores and restaurants, and student nights in as well. So for instance, certain restaurants will have like two for one and things like that when you have your student card. So definitely make the most of that. It's definitely something I miss about student life, is the student discount, because it was very useful.
Oh, Nikita, I could have done with euros years ago when I applied. Honestly, I chose my bank to get with this really mint, sparkly silver mini football, absolute quality. We had a kick around in the car park of our halls in like the first week, and the goalkeeper tipped it over the bar straight into the grounds of a hospital next door. We never saw it again. So, you know, your train card there to get you travelling back home and to see your mates, that rail card, it was worth probably hundreds of pounds to you. My mini football probably was worth £10. Silly boy, you know. And those tips there really, really help you, because when you're 17, 18 and you're looking like you're getting thousands of pounds coming in, you're thinking, oh, I'm going to be living like a king here. This is a lot of money, because you've never seen that much money come into your bank account in your life. But also, you've never had to cope with those real life outgoings either. So genuinely thinking it through beforehand, and do talk to your parents. You know, it's a top tip generally in life, but do talk to your parents about budgeting, because they're going to know this. They're going to have to manage their bills, their mortgage, their rent, and whatever else it may be. So pick their brains, you know, and they'll tell you their kind of pitfalls and challenges, as well as their top tips for guidance. It's really, really, really an important part of making the most of your university experience. So what else have we got to cover? We've covered the fact that university does have fees, but that you can borrow those fees through a fee loan if you need to. We've talked about the fact that the living costs, whatever they may be they small, be they large, you can cover with a maintenance loan. We've talked about the fact that amount you get will vary depending on your income and whereabouts you go to university. We've talked about the types of things that we'll cover in terms of those actual outbound costs as well. We've talked about how you apply for the funding. Then we've talked about the repayments, and hopefully put your minds at rest that you're not going to be poor in 20 years' time because of these repayments. Then we've talked about the extra sources of income you can get, the part-time jobs, the work placements, the scholarships and bursaries. We've talked about that budgeting top tip just now from Nikita to how that money go as far as possible. Let's just pick up Kian's question at the bottom there. If you pull out of your course after a year, you'll owe a proportion of money. So if you pull out of your course at Christmas in year one, you'll owe essentially a third of a year's worth of costs that you'll pay back on that same ratio once you hit that £27,000 plus repayment threshold. If you do 2 terms, you'll pay back 2/3 of a year. If you do a whole year, you'll pay that whole year back. So you're not eligible for 3 years worth of fees, but you are eligible to repay what you have had for that experience. So it's something to think about, but if you do your research right when you're picking the right course and genuinely think about what course, what uni, and what's important to you, hopefully you'll get an experience you enjoy and you won't need to go through that particular situation. But if you do, you'll owe a small amount that you'll pay back when you start earning, but not the whole load of fees. Right, anything else I've missed, guys, that we need to add before we close and let these people go off and have their din-dins or go for a run or whatever it is they're doing next? Hey, not just me, it was a collective effort. Right, happy days. Thanks so much for popping all the questions into the chat. Really, really appreciate it. It's always good to have people talking to us, make us, you know, realise we've got real people watching the stream, so that's good. Thanks very much to Del, Henrik and Nikita for your contributions, valuable as ever. If you want to ever get in touch with us, phone number and other details are popping up on the screen, along with the information about student finance to pick their brains directly. So do reach out for any questions that you've got. Have yourselves an amazing evening and stay safe, stay happy, and hopefully we can all move forward through this Boris Johnson roadmap to success over the coming weeks. And who knows, we may even meet you in person one day rather than over a live stream. So fingers crossed. Have a great evening, everybody, and thank you and good night.